Hello everybody, welcome to another update on the stock screener. Today we are going to talk about pot stocks. As you know, I have been looking at every company on the CSE, on the TSX and the Venture Exchange. And what I noticed was that almost 50% of those companies were pot stocks. And those pot stocks were not making any money. None of them were making money, except one, and that's Intercure. So I found this stock while browsing all the companies, and I started to investigate. And apparently, Kathy Wood has bought this. She bought this somewhere in March, then it shot up, and now it's stable at this level at 340 million. And well, I started looking at it, and it looks like a very good company. I generally don't like Cathy Wood stocks, but this one is actually very good. And I'll tell you why. So lately, pot stocks are the new hype again after a bear market. So I think a lot of people will be looking at this company. So let's take a look at the financials. So market cap 340 million. Cash is pretty good, 60 million. Debt is lower. Price to book is 2, so that's very good, very cheap compared to the other pot stocks out there. It has an equity. It went to the Nasdaq this year, so everyone can buy it now. It's the largest cannabis producer of Israel, and very important, GMP certified, which means that everything is checked. Okay, so the packaging is checked, the software is checked, how they produce it needs to be clean. Quality checks are done everywhere. There's serialization on the products. So it's GMP, good manufacturing practice. It's vertically integrated, so they produce the seeds, distribute it, and even make the cannabis oil, and it's sold in the stores in Israel and also internationally. So they're expanding in Europe. It's already ongoing this year. EBITDA margins are very good, 25%. That's a good business. And very important, they have a 5-fold expansion potential, which I will talk about later. And it's very cheap. So the earnings from March to June quarter were this. Net earnings are only 2 million per quarter. But of course, this is going to grow. And the latest number was 23 million revenue. They didn't say this yet, but they already gave us the number 23 million revenue. If we calculate this, you can look at the revenue here, 45 million revenue. So this is in NIS. And you can see that the cost is about a half of it. So you subtract half of that revenue, and then you still have some of those fixed costs, 10 million, and then you get your operating profits. And if you calculate this, then this is 25% EBITDA. So they gave us this number revenue of 23. So if you take 25% of that, you have 8 million. Do this times 4, and you have 30 million EBITDA earnings. Okay, so that's around a PE of 10, or a little bit higher probably, but this is not expensive. This is a pot stock that is actually not overvalued. You have already a PE of 10, okay? And it's going to grow much more in the future. You know, the cannabis market is growing. I don't know why everyone likes this cannabis, but it is growing. And this company is cheap. Equity is rising, so that's good. Now let's take a look at some other items. So they have 2 sites to cultivate. And this one is at 55,000 capacity, and this can be expanded to 160,000 square feet. So that's about a threefold. Then this other site is 300,000, and this can almost sixfold in capacity. So this is very important. You are looking at a company that can expand production, which means that they can expand revenue as well. Okay. If they do this, this company is an easy fivefold. Okay. Easy fivefold. Based on the fact that it's already fair value right now, so they can fivefold. This is the projected growth of the market. That's threefold in 4 years. So you are buying something that's in a growing market. That's good. Here you can see Intercure, enterprise value to revenue is 2. Very cheap. And compare this to the other ones. Canopy Growth, 96 times revenue. Aurora Cannabis, 15 times. Tilray, 100 times. 22, 57. I mean, why would you buy these companies at market cap of several billions if you can buy Intercure at only 300 million? This is illogical to do that. You need to buy the cheapest one, which is Intercure, at only 300 million. And it's actually earning money. All the other companies are not earning money. They are loss-making companies. I don't know why people don't understand this. Intercure is much better than all the other companies. These are the products that they create: cannabis oil, even cookies, apparently. So this is the supply chain. They create the seeds, they cultivate it in different facilities, they ship it to a GMP packaging facility, it gets rolled out in the retailers and the pharmacies. So it's vertically integrated, which means there's a lot of flexibility. And they are expanding in Europe right now, which is also a growing market. So conclusion, very cheap company with earnings, important, and growing at a fivefold speed in the coming years in a market that is also growing, and cheap compared to the other companies. So I'm invested in this, and I'll see you in the next video.